resume the recording. So only five, one, two, three, four, five, which is fine, right? It's everyone's wish, and in fact, they might have commitments as well because it is Sunday. So some family commitments definitely would be there, which is fine. So we will proceed as per the plan, right? And we will do what we discussed. First, I will wait for you guys if you have any query based on yesterday's session. Anything if you want to ask, if maybe if you have tried VWAP, AVWAP, anything on charts or related to pain point, any doubt if you have seen the previous chart in the group or maybe Mr. Faz shared or any other doubt you have, we will first discuss that. Then we will move to understand what exactly the red lines are, how they can be used in combination of pain point, and then we will see this Excel file, right? The calculation, and we will together today make the lines for tomorrow's start, right? For Nifty, maybe mid Nifty or mid Nifty. I mean, either one index we will try to make together, and maybe we can discuss the Nifty and mid Nifty as well tomorrow or for this week. What can be the probabilities, right? So this is how I am thinking to do today, right? These things. Now I leave to you to start with any doubts, anything you want me to cover up again based on yesterday's session, which is not clear, or you want any particular thing me to repeat again. Please feel free to ask. I will do that. Anyone? Yes? No? All good.
No, sir, all good.
Yes, sir, all good.
Okay. All right. So silence, I would consider that no question, right? I will move forward now. So, yesterday, what we did, we discussed first of all the pain point, right? We discussed what exactly is the pain point. We discussed the VWAP and we discussed the AVWAP, right? These three things we discussed yesterday. There are two more things on our option chart, right? So, what are those? They are the red lines, right? Which is nothing but I said yesterday also that it is nothing but the support and resistances based on the highs and lows calculation of calls and premium calls and put premium prices, right? So this red line has been calculated based on previous days highs, lows, their average, and some percentage based on the other option. So a unique percentage which I've been taking in relevance to the option open interest, right? So where the pain point can uh, lead to trigger some massive increase in prices or massive decrease in the option prices, right? So based on that, so that is some understanding which I got during some time. It is based on that. Mm. We will not be wasting time in calculations. We have a foolproof method. We will utilize our time in drawing or finding these levels, right? We will not waste our time कि किसको कैसे क्या करना है. Everything is ready as I promised in the beginning also that you will get these files. I will not let you waste your time during the market hours. Suppose if you see any opportunity, let's say in ITC 500 call option, for an example, right? If you are seeing any opportunity and you want to know the situation, what is happening. So you will not be wasting your time in doing calculations, see what is happening here, what is the blue line, red line, calculate karna. Nothing, you just need to simply put the symbol here. It will give you the value, right? This is how the format is going to be for these lines. Now to discuss what actually these red lines are. So in short, not actually in short, but just think in a way that suppose, yes, suppose in call option, I mean, till yesterday we were very clear that we have to monitor both the option prices, right? It is a mandatory thing that you need to monitor both the option prices. Now suppose if call option prices are near the, so there are two red lines, right? One would be a top, one would be a bottom, so they would be far. On expiry days, there will be a chances that they both will be near, but on normal days, they would be pretty far because that's how the market movement defines. They need space for the market to move on when they reach the expiry day on Thursday, maybe, or let's say Monday, tomorrow is when they have the expiry. So on expiry day, the option prices red lines would be closer, but otherwise they would be far. So for an example, what we generally see, I mean, what we generally do is this. If something is near resistance and the other thing is near support, right? If it is not breaking the resistance and started making lower lows, and if something is at support already, the bottom line, let's say. So what the logic says, your eyes should try finding a dhamaka setup here at the bottom. You have a stop loss in front of you, very small, that either this dhamaka forms somewhere here, right? You might get 2, 3, 4 rupees stop loss if you are getting. Attempt that trade. Or you have this line, any closure below it, attempt this trade, a strict stop loss of closure below it. So few conditions. On normal days, if it is not an expiry, right? So generally prices will not break the bottom line, right? So there are two lines. Either one would be up red line, other would be the bottom red line. So generally prices will not break the red line unless there is some strong movement in the market. If it is a trending market, they would surely, one side would break it, other side would break upside. But we all know that trending market we see, trending, by trending I mean 200, 300 points of, I mean more than that, one-sided rally kind of thing. So we see it once in 10 days maybe, right? That's how it goes. But generally, why, let's say on Friday an option chain starts. So on Friday only, let's say on Friday a very big movement comes, just like last Friday, a very steep fall came continuously, right? So that was a day wherein fall option prices were tend to break the bottom line as well, and it was clear that this is going to be a trending day. It broke these, let's say they started falling from here, they broke them. So by default, our target would be this. If our VWAP in AVWAP are supporting, so you have a target in front of you. And these put options, let's say they started moving from here, they broke the bottom line, they broke this. So by default, you know that your target would be this. Prices will not take any stoppage in between. So that is the use of red lines. You can trust them 99% that if one is breaking this, let's say, and other is also in your favor. Let's say if it is breaking this, so the situation would be this will keep on falling. So by default, the other has to go on the other red line, right? So these will be your, that's how you can use the targets, be it option buying or be it an option selling. Suppose market is bullish and they came below pain point, which means as per yesterday's session that they are already in comfort zone now. They are selling put options. AVWAP is like this, VWAP is like this, right? So you know that market is fall. I mean rising and put options are falling. And now let's say call options are somewhere here. They are struggling near resistance and they give you a breakout above it. That means they are tend to rise very badly upside. There is a panic and you have this much scope and put option to stop it. You can eat this premium throughout the day. Slowly, gradually, put option prices will keep on declining, declining, declining. And at one point of time, they will surely give you your target. If you're selling options, so you need to have patience. Just follow VWAP, ABWAP, keep trailing your stop losses and eat it, right? In option buying, let's say something is happening like this, that put option, we started our day somewhere here. Let's say we started our day somewhere here, right? This is where we started our day in both the options. For an example, let's say one option in the beginning only broke it, right? These lines, or let's say this is at bottom. Let's assume this condition. My call option prices opened somewhere here, right? My put option prices broken somewhere here. What does it show? That put options are in panic, right? It is the beginning of the day. But what I see is the AVWAP is above, VWAP is above, even they are above the panic line, but VWAP and AVWAP are above the prices, which means the sellers are in control and they will now short very badly. They want to eat this much area of this premium and they will start making lower lows in its option. So you should, your eyes should tell you for the other option that okay boss, this has started decaying or decline, I mean falling down. Why I should not, being an option buyer, use this opportunity that it has not yet moved that much, let's say. So I should be finding a dhamaka or double dhamaka here at the bottom near these lines. If I get this, why not I should take this trade of small stop loss and target this. So by default, if it has to come here, the option seller wants to eat this premium, they will take it to here, right? This thing cannot be ruled out. You will serve it in live market when you do it, right? You when you will have defined targets in front of you and you will be able to sit and reach those targets. That's how these red lines will play the role in option buying or option selling. Now, suppose on expiry days, if this bottom line is broken, right, in particular option, let's say the option price is 89 is on expiry day, and this is 190 on expiry day. This 89 is broken and your AVWAP, VWAP is supporting you, means this option is very, very, very weak and it has very high probability that it has to become zero. You can keep sorting it with the hedges, maybe take margin benefit or I mean not big quantity, whatever is your quantity size, I don't know, but you can remain in the trade with stop loss in the system as VWAP and AVWAP. Do not think कि यहाँ short किया है, so this is our stop loss. In this region, so your account will blow up, right? So always you have to look for small stop losses, be it an option selling or option buying. In option selling, the AVWAP and VWAP thing will help you a lot in managing your stop losses. But make sure in stock, as an option seller, if prices are below all three lines in short, means the price is very weak and you can eat the premium till the end of the day. As simple as. However, if you're an option buyer, they can do a drama because of DK, right? Here, DK is helping you because you're an option seller, you sold put option, right? DK is happening, so it is helping you that you want prices to go down, they will go. But if you are an option buyer, here they might do a drama, right? That you would expect कि ये तो नीचे चला गया, so why it is not from here reaching it here? So it will test your patience. It has to go here, but because of expiry and decay, right, in the premium, it will take some time on expiry days. But on normal days, that would not be the situation. By normal days, I mean Friday, Friday, Monday, Tuesday. This drama would happen on Wednesday and Thursday. It will take some time for you to reach your target. But I mean, it will give you some panic attacks basically. कि यार मेरा stop loss ना चला जाए. Right? If you're an option buyer on Wednesday, Thursday, so it will test your patience, but you need to trust your system. If it is below it, getting down and down, so you need to stay in the position. Don't be like 10 rupees profit I'm getting, I'm exiting. Keep trailing your loss. Stop loss is basically what I want to say, right? Keep trailing your if you go out or stopped out by trailing, which is fine, right? By can I mean trailing wala method we I have also explained you, which works very good on trending days, not on sideways days like this. On trending days, so it works like a magic. You can make very big in that. But on Wednesdays, Thursdays, it will not give you a very smooth and fast movement till your targets. It will take some time because of decay, right? But on the other days, it will give you targets. However, in so I'm sharing with you my experiences in indices like Mid Nifty and Fin Nifty. They give you targets in one candle because the spikes are brutal in Mid Nifty and Fin Nifty. Right? If you're an option buyer, you let's say buy this in one candle only, it will give you a target. So you need not to sit in a greed for the higher targets as well. Book some path. If you are holding let's say 10 lots, I would suggest you to book 7 lots and maximize lock your profit. Then sit with 3 lots to see whether they are going how much up or down. Right? Keep trailing the profit for rest 3 lots. These spikes are for Mid Nifty and Fin Nifty because these two indices are where they give very brutal uh, spikes. And on Fin Nifty, though, in the beginning only within 30 minutes or 40 minutes of the day on expiry day, they give you target on both the sides. Be it you are option seller or be it you are an option buyer. If you are an option seller, let's say if you see something happening going above and you want to short it, within 40-50 minutes, it will give you the target, the bottom line. Now, suppose if you have appetite to eat only this, you are done for the day, close your system. But if you are someone who want to ride and want to behave like a proper option seller who want to see option becoming zero, then you need, if it is becoming below this, then keep sitting and keep moving or trailing or stop loss, right? If you have time, if you are not working full time working, let's say you have time, then sit for that. But initially, don't do that. Don't sit for zero target, right? Make these points as your resistance and support, and if prices are falling from the resistance from the top, so they have to come at support. If prices are jumping from the support, they have to go to resistance. So that is the simple logic we need. You all need to play in the beginning, right? The moment you will become pro in it, you will get used to it. Uh, let's say you spent 1 month, 2 months with small quantity, then the confidence level will go to next level. Your confidence will reach the next level, and then you will be able to judge the what. I mean, okay, so this is staying above it. It is staying above VWAP, AVWAC, making higher highs. Why should I book it at 89 if it is as is? I will fix the zero also. Or not zero, I mean, but 10, 15. Because after 10, 15, so you also know it can do blunders. What happened last week also. So those are the exceptional days. But yes, I mean, if option has come to, if you shorted something at 100 and if it has come to 10 or 15, right, or even 20. So I consider it that you have eaten maximum, it is zero. If you have shorted something at 100 and it has came to 20, means you have eaten 80% of premium. Now, if you are sitting for these 20 rupees also, then only uh, you can save yourself, right? In my language, this has become zero at 20 or 15 if it has from 100, right? No need to wait and sit till zero. एक करण option से ना. Option buyers, you need to define your daily target. My personal motive, I mean, my personal target or aims are to take at least this from one trade of index, right? This is my personal target, and the stop losses I look are very small. In Nifty, I'll tell you my rules, what I do. Just a second. In Nifty, right? Um, why it is not working? Yeah. No, okay. In Nifty, I do not take options if the stop loss is looking to me more than 10 rupees per lot, right? And this is maximum. I'm saying this is maximum. I enter my full quantity if I see any stop loss like this, 5, 6, 7 rupees, right? These are my favorite stop losses in Nifty options, right? If I'm finding, let's say if I'm trading based on Dhamaka setup, double Dhamaka setup, right? On Nifty options, prices, let's say, are at the bottom line, and the opposite option is falling from the top. And I see some Dhamaka, double Dhamaka, and I fortunately get any trade with these stop losses. I enter my full quantity, whatever my quantity is, right? With 5, 6, 7 rupees stop loss. Maximum limit of my Nifty option is 10 rupees stop loss per lot, not all above than it. And by 10 rupees, I mean to say if an option is trading around, let's say, generally 100 to 140. This is the basic range, let's say 100, or 90 also, right? 10 rupees, I don't mean the expiry वाले days पे option is of 40 rupees and I am taking a stop loss of 10 rupees. Then I will be called as a most stupid person in the trading world, right? I am keeping 25% as a stop loss. It does not make sense. The the smaller the premium is becoming, you need to make your stop loss as small as possible. On expiry days, when premiums are around 40 or 30, do not go any stop loss which is more than 3 or 4 rupees maximum. And that is also 10% you are losing. So you need to reduce your lot size also. You cannot buy, let's say, 2000 quantity, 1000, or 4000, 5000 quantity, right? In case if you trade with big quantities, you need to reduce it. You cannot risk that much amount, right? Because decay will happen quickly. At this price, we want momentum. If we are buying at 40 rupees, we want quick 52. That is 50%. We want quick it going to 52, right? So that's how on expiries it will work in favor of you if you make it small stop losses. That this is for Nifty. Nifty and Fin Nifty stop losses are same, but in Mid Nifty you again need to reduce your stop losses more because the option prices of Mid Nifty are way less than the other indices. Bank Nifty ka I cannot tell you because Bank Nifty I trade very less. You need to figure it out yourself. I trade Bank Nifty very rarely, once or twice in a month, or maximum three times, right? And I simply trade it when I see a maximum of 10 to 15 rupees loss per lot. Generally, people recommend the 50 rupees per lot, 50 rupees per lot. That is out of my capacity. I don't do that in Bank Nifty because I have taken a lot of pain initially in Bank Nifty. So I never put these stop losses in Bank Nifty. My eyes try to see dhamaka, double dhamaka in Bank Nifty. And when I see 15 rupees, right, or max to max 20 rupees per lot in Bank Nifty, I enter in. This is the very high range I'm saying, very high range. So just do it in a way. If 10 rupees I'm making in Nifty, because Nifty index is at 25,000, so I can afford 20 rupees in Bank Nifty because it is at 50,000. And 5 rupees in Mid Nifty because it is at 12.5. Simple rule, simple mathematics, right? The index price is increasing, and that's how your stop loss is increasing. So Mid Nifty 5 rupees, Nifty 10 rupees, Bank Nifty 20 rupees is what I trade. You can follow if you're an option buyer if it suits you. There is no hard and fast rule. That's how I manage my risk and my money. Right? Fin Nifty is same as Nifty, so no need to change the stop loss in Fin Nifty. I mean, we are sitting in Nifty at 25 and Fin Nifty is also around 23.5 or so. So almost both are close. So there is no big difference between Nifty and Fin Nifty. That's how stop losses I consider of these indices. In short, again, just to repeat, these red lines are nothing but support and resistances, and they are not normal support resistances, right? Don't consider them कि ये pivot वाली है कि pivot लगा दिया तो pivot से मैच हो जाएगी, right? That's it. ये pivot से हमारी मैच हो जाएगी, never ever. You will not able to match it with pivot. कोई सा भी pivot लगा दो. I mean, pivot. Everyone would have tried Camarilla and other Falana Dimkana things, right? So they will not match with it, right? So these are not pivots thing. They are purely calls and puts, high lows, and a percentage amount of these highs and lows, which usually works in the live market. Because see, big money is also watching the pivots, right? They know that it has been taught on YouTube, and every newbie is taking pivot in consideration. कि pivot P3 पे आए, R3 पे buy कर लो, और R3 पे sell कर दो, S2 पे buy कर लो, etc. So that's not the case. These supports and resistances will work in a very awesome way, provided you are watching both the charts, and make sure to watch the ITM chart. If Nifty is 25 350, I'm just telling you 350. So on your left side it should be 300, and on your right side it should be 400. If you have extra screen, so you can let's say go for 500 also, right? You can go for 200 also. Why I am not talking about 50 multiple? I have recently, not recently, it's been 6 7 months also. I have started doing 50 wala multiple options also, but earlier for long time I did only the 100 multiples because those are the places where big money uh, put their money. put their bet maximum at the 100 multiples, right? If you see, go and see the option chain. Let's see it here only. If you see the option chain, so big money will not create their positions at 350, right? See, either they have created at 300 or 400. And see, not at 450, they are at 500. So even they are not risking, putting bets on 350, 50 wala multiple. They are putting their bets on 100 multiple. So here see, either at 200 or 300, nothing at 250. Either at 300 or 400, nothing at 350. So they are not putting their bets. So why should we do? But yes, of lately I have started uh, doing 50 wale options also. You can try, but start with 100 wala options. That would be more beneficial for you. As and when you grow with the system, you start making money, you start understanding the behavior of prices near these lines. This blue line is very, very, very important, and whichever is the bottom red line on your chart would be extreme important if you're an option seller, right? You can just note down these things. Blue line is very important for everyone, and the bottom red line would be the extreme important for option seller. If it is breaking the red line and making lower lows, staying below, it means it is a golden opportunity for you to eat the premium. Just sit and seeing your money growing, right? By shorting that off. As simple as that. So that's about these lines. One more thing which I want to add here, which my experience says, right? A little different from these lines, but I forgot to discuss yesterday, so I am doing it now. Sorry, why it is not going. So, what my experience says is when, let's say, at 25, 300, prices are at 25, 300. Let's say this is a highest call option here, right? Highest open interest at call option of 25, 300. And we are trading somewhere around 25 to 80 or so, right? So we all would agree that this is a resistance. Is it or not? If we have a very strong, fall open interest here. Do we all agree?
Yes, sir.
Yes,
Yes,
sir.
sir.
Yes. Now,
Yes, yes.
what my experience says is they generally become to come in panic when price start staying above the multiple of 25. It is very important. Keep a note. So if prices start trading above 25, 325, and they are staying above it, holding 325, let's say staying at 325, 27, 30, again 25, 30, 32, 25. If they are holding, they are making candles, they are staying above 300. That means they are ready to shift to next cycle. So this 25 wala thing is very important. You can test it in live market. Suppose 25 200 is